And we're going to talk now about the health insurance giant Discovery, and not just health insurance, other things too. Reported an oversubscribed rights issue of 67.4 million shares, and Ricky Faber is the Chief Financial Officer of Discovery, joins us now in the studio. Ricky, was this what you expected from your rights offer?
No, the result was a lot stronger than we expected. We expected that it would be fully taken up, and I did expect an element of oversubscription, but it was beyond what I expected.
Ricky, just eavesdropping on your earlier conversation with David prior to getting to studio, sort of just talk us through the process of one gets to the decision of a rights offer, given the perceptual challenges that could be underlying here, especially when it might be perceived that there might be a bit of trouble, and this is why a rights issue is in order.
Sure. So, well, there are actually two parts. I guess the first part is the decision to do a rights issue, which is not a light one. Any capital raising exercise, you've got to take it with great circumspection, and particularly when you have major shareholders like we do, our founding management and other shareholders that have to dig into their own pockets to follow their rights. And so once you've passed that decision, then the question is, how do you get it out there in a way that is I guess a sign of strength? Really the point is that Discovery is not in any form of distress. And normally rights issues are seen as a case of a company in a sign of distress needs to raise capital. Ours was completely the opposite, was to fund growth. But it's how you get that message across, and how we get the market and commentators in general to understand that, and not to attribute some sort of negative view to it. And we were quite worried about that.
Dwayne?
Well, Ricky, you can see the share price. The market's not worried about Discovery being in trouble. When you look at the South African market, by and large, this is a saturated market. I mean, Discovery's made inroads into other fields other than where they traditionally started. But clearly your growth is overseas. When do you see this becoming cash flow positive? You've done the rights issue now to fund expansion overseas effectively. When do you think that your overseas, especially your Chinese operation, is going to become cash flow positive?
And we haven't heard too much about China yet either.
That's a very good question, and partly precipitates what some of our concerns were. And particularly if you talk overseas, the biggest market that we're in is the UK. In the UK, we're in two businesses. The one is in health insurance, and that business is making money. It's not huge in the scale of things, but it's a profitable business, and that's cash. The other business is life insurance, and life insurance is sort of business where you actually invest a lot as you grow the business. It's growing very strongly. On the current basis, I mean, it's making operating profits, which is represented by cash, but we're ploughing that back into growing the business. And I think it's going to be a while before that business starts generating out of cash. And then your specific question on China is definitely the most interesting, probably the most interesting of the businesses that we're in. My suspicion is that China will grow phenomenally. It's showing early signs of doing that, but that cash and profits will be a long way off. This is a Chinese-style business. It's almost like the Wild West, and it's a revenue market share gain as much as possible. So I suspect there'll be many years that we'll be reinvesting and expanding. The CEO, chairman of Ping An, Peter Ma, he just talks about explosive growth. He says, sign up the customers as fast as you can. We'll worry the profits and the cash will come later.
Explosive growth, that's a good phrase to have in association with the company. But when the news of the rights offer first came to light, we know that you were very clear about how the capital raise was going to be used, the UK business, which you've spoken about, and of course adjacent South African markets, which later came to light, would be expanding that relationship with FirstRand around Discovery Card. Now, on the back of that, a former CEO of FNB then tweeted, I don't know if you're on social media, saying that, I think this is the beginning of Discovery Bank. We've got you at the desk now. Can you dispel or confirm?
So at this point, we haven't got any firm plans to go into banking or get a banking license. We've been talking to FirstRand for many years about expanding the products that we offer into adjacent products. So a whole range, home loans. We even had a home loan benefit a couple of years ago. I mean, the step into banking per se, to get a banking license, is a big one. And we've had some thoughts about it, but it's a really big decision for any company and any board to make, and not one that we've made yet. I can't say we'll never be a bank, but at this point, we're
Wayne, how does it sound, them going into banking? And I'm asking that also in terms of your proprietary, the reward system.
Yeah.
You started it with a medical aid, you've moved it into insurance, you're doing other things. Does it fit with banking? If so, you could start undermining some of the other banks.
And before Wayne answers, I just, in continuation with that, another tweet that came through said, Nosipo, please ask if we can exchange our Vitality points for better interest rates when the bank comes into the market.
Look, Discovery's big asset is the client base. So over the years, Discovery is selling more and more product to a very loyal client base. So it's not inconceivable at all that banking does come. But, you know, they've got the card, they've got the liaison with First National Bank. And if you want to know a truly overtraded sector, it's the banking sector.
The strategy going forward, I mean, we've spoken a little bit about the UK, but let's talk about Africa broadly. Is this a playing field that you're looking to penetrate a bit more? And if so, which markets are we looking at? And if it's a product differentiation, where are we looking?
So Africa per se is not on our radar at this point. I mean, we sell fundamentally two types of products, health insurance, and there's very little private healthcare market in Africa, and life insurance, which is fundamentally a distribution play, and we don't have that in the rest of Africa. We kept pretty busy expanding in a different way, as you may know, with partnering with other
Ricky, I'm a
clients.
bit surprised to hear that. You say medical care in Africa is not at that stage. Can't you create the market? Isn't that the sort of thing Discovery likes to do?
So I'm laughing a little bit because I was sitting at a dinner at one of the conferences with one of the hospital groups, and we were talking about this exact thing, and they said their worry about going into the rest of Africa is there isn't a private health insurance market.
Yeah.
And I said, well, our worry about going into the rest of Africa there isn't a supply. So we've got nothing to pay for short of flying people back to Morningside or Mill Park or something like that.
So can't you get together, is the question.
And one of the investment bankers at the table said, well, yeah, we've got a deal in the making. But both of us quite busy, so we haven't really pursued it.
Wayne, a parting shot from you?
Look, I mean, obviously it's been successful. Do you see any other markets in South Africa, any other product fields in South Africa you think Discovery might be moving into? Forgetting the fact that I work for Momentum.
So, I mean, we're always looking at different things. I mean, the examples keep getting thrown around, but we haven't made these steps. So things like asset management. We're probably the only life house without our own asset manager. We haven't quite got to the scale or the proposition that makes sense, or worked out, to be quite honest with you, what makes it different. How can we do it in the Discovery way? Because, as you said, our value add is the client, but it's also doing things a bit differently. So if we can crack that, then I think asset management or maybe some other product lines would be something to go into. Even banking, if we can solve those problems.
Banking is not totally off the cards, it seems. Ricky, thank you for making the time to join us. Ricky Faber is the CFO of Discovery.